So Canadian homeowners might be getting that break they've been after when it comes to their mortgages. Before I get into that, I'm Dave Mason with the Dave Mason Real Estate Group. I make educational videos about the Vancouver and the Fraser Valley real estate market. If you enjoy this content, or if you're new to my page, do me a favor, like this video, subscribe to my channel. It helps me get in front of more people like yourself. And if you would like to book a discovery call, you can do so in the link below, found in the description. So Canadian home buyers, they might be getting the break that they've been wanting, and this is due to the fact that the Silicon Valley Bank, which you probably already knew, had a major collapse. And when this happened, it had a direct effect on the Canadian bond yields, which are tied to the 5-year fixed mortgage rates. So when that took place, some banks and banks in general were reducing rates up to 0.4%. So if you are actually house shopping right now, it might be worth kind of getting that pre-approval in place and locking in on that rate. Best case scenario, maybe the rates come down a little more, and we'll get into that, and you can renegotiate that and get a more favorable rate. Best worst case scenario, they stay the same or they go up a little bit, and you are tied to a rate that we have not seen in some time, pretty much about the middle of 2022. Now, to put that into further context, last year you were getting a 5-year fixed rate for the most part between 5.09 and just over 6%, whereas right now you can get a 5-year fix for just under 5. So depending on when you were looking last year, that is a significant savings when it comes to a lending rate. So again, like I mentioned, it doesn't hurt to lock in and get a rate hold, at least in the time being while you were shopping. So just to put that into a little bit more context, if you were to jump into a 5-year fixed insured mortgage right now, some of the rates are going at 4.49. If you're going to go on a 3-year, you would be at 4.59. And if you go on the uninsured side of things, as on a 5-year, you're at 4.79, and a 3-year would be 4.89. So those are kind of the rates floating around right now. But as I mentioned previously, those are significantly under kind of what we were seeing middle to late of last year. So they are more favorable in terms of some of the buyers who are currently shopping. And maybe that is part of the reason that we are seeing a lot more activity right now than we were seeing earlier in the year and late last year. I'm sure it's not all tied to that. Inventory, buyer confidence does play a factor into that right now, but perhaps those are that is one of the reasons right now when it comes to those rates being below the 5 mark for the first time in a long time, why you're seeing the activity that we are seeing. Now you might be asking yourself, will rates come down sooner than later, faster than anticipated? How fast is this going to take place? Now, a lot of variables are taken into consideration when those things are being determined. Obviously, if the bond yields do remain under 3%, the fixed rate will drop, but it's not going to be overnight. It's not going to be at a rapid pace, and most likely the variable will be to follow. But the one thing to keep in mind is the Bank of Canada was pretty adamant on pausing the rates or keeping them in range until inflation hit its target of 2%. Now, when it comes to inflation, we are making progress faster than anticipated. We saw the single biggest month over month decline from 5.9 to 5.2 from January to February in a long time, in over 3 years. So that's a good sign, and we are ahead of what was projected of a 5.4 number for that month of February. So things are looking up, but it's a far cry from the 2%, the target rate. So I don't anticipate, or would I encourage any major changes when it comes to that interest rate. I think it's important that we hold tight on these things until we can curb inflation. I know sometimes that it doesn't work out that way and they have to do things to the interest rates, but I just hope that we can still curb that spending, because it does have a major impact on the economy, and we want to curb inflation. That's the biggest thing, and get out of this minor recession or any impending major recessions. So as far as the market goes, has it had a direct impact? I think it has a little bit. I think there is buyer confidence in the market right now, like I mentioned before, and we are seeing that when it comes to the multiple offers on properties. We are seeing things back with the direction of offers, like I mentioned in a previous video. So there's definitely an uptick in activity, but it's not all tied to the interest rate, in my opinion. I think it's also a fact that we do have lack of good inventory. And one thing to note too right now, and what I'm seeing when it comes to this type of activity in the market, is the fact that the buyers right now, they are a lot more savvy. Yes, they are more savvy. They're more aware of current values. We have been dealing with multiple offers on our listings as well as other listings that we're writing for buyers on, and not everything is selling significantly over. It's not selling over market value. Things are getting pegged at market value. Buyers are putting in offers under asking. So I think what that tells us is what I mentioned there. There is more buyer savvy people out there, and there's not a fear of missing out. That fear of missing out that was in the market from the 2020 to the 2021, beginning of 2022 has kind of gone. There's nothing really making people want to just jump on these low interest rates, and I think they're aware that more inventory will come on the market, so they're a little more cautious with their offers. So to wrap things up, yes, the rates, they are coming down a bit, at least the fixed rates. We will see what the variable rates do. It will depend on the bond yields and where they sit. I do think this is going to create some opportunities for people who want to lock in on the lower rates, as I mentioned before. So do so, get that rate hold. If you have questions about the market, you want an evaluation, you want some insight, discovery call, I encourage you to reach out. I would love to talk to you. Thank you for watching. Stay safe and take care.